Good morning, corn update. Let's make this a weekly update, and I'll probably switch back to morning briefs of all the markets here. Any rate, last night the crop condition rating fell 5 points in USDA's report, so it really got the trade excited, and you can see they gapped the market higher. And our alert yesterday that the level 3 had bottomed sooner than expected was a good call, and we've now raised upside potential here to as much as 365 relative to the drop in the crop condition rating. We're still using the lower downside the low, not so high objective of 353, only if I could talk this morning. We're still using 357 as a potential single price target. And so this market may just stall out here, even though it looks so brisk. You would say, wow, it is going that high, and it may do it. But you have to be concerned if they pull it back to fill the gap, even if it goes higher later, that could actually take away from some of the upside momentum here. We have a daily stochastic that's flipped to a buy signal. It left the mid-range area for a secondary buy area, and it has widening spread, warning there's a chance of lingering upside momentum. Now, of course, we have to see how it closes, because this looks the most bullish as of this morning, and this is a daily indicator, so you have to see how the indicator behaves by the close today. But it's looking bullish for you corn folks that want to be bullish, and the bears are getting hurt, and we knew the funds were getting out all along. They were quite aggressive getting out last week, apparently. And so the bottom line here is some of them are going long. Others are probably still trying to work out of their longs and get out. Don't have much else to say other than once this level 3 top comes in place, we're going to see a down move. So I think it's higher into next week, down next week, and perhaps into the following week for this short-term fluctuation. The problem is, even though if it fills this gap here, I realize some would get all excited saying, well, that's negative, that's not a good thing. But if it were to do that today or tomorrow, it's a good chance it's going to be a buy the dip, and they're just going to put it back up. Okay? So now let's switch out to the weekly chart here. And I did see on the news that Arlen Sutterman, who's, let's see, he was FC Stone, so I think it's called Stone X now. He kind of surprised me. He moved down to 180 right after USDA report off of this weather, and that didn't surprise me. He was factoring in the derecho and Iowa and stuff. But last night he come out, and now I already forgot the number. I think he's already down to 176 or something like that. And I truly believe the CPT model, in terms of just research, not necessarily a signal for the model, I think it's telling us we're not going to get a record high yield this year. But I think there's still a chance it stays in the 170s, which would prove the C model forecast back in January for strong yield to record yield is still a correct forecast. And yet, I must continue to consider the fact, what if we had something really strange and the CPT model, which in my opinion is giving a signal and does say yield should be less than last year. And even though in the past it would say, well, it's got to be 5 bushel less than last year, which is not going to happen in my opinion, we can get a new statistic. So I'm saying a signal, we should consider a chance of 167.3 or lower. It may take USDA all the way to January to give us that, but it could occur because there's folks out there dropping this yield pretty fast. Well, my gut feeling is probably the model is going to give us a signal. It's going to be wrong, and it's going to come into the 170s. But I think with the model plus the precipitation and just using it as an analytical tool and not picking the model over its signal accuracy, I think it's just suggesting we ought to have a sub-record yield in corn. And I think the model's considering that, okay? So here's the weekly chart. I think the traders are catching on to all this now. They're willing to say USDA gave us their highest level. Forget this crop gets bigger, bigger, bigger idea. It's a done deal. This crop's going to get smaller, okay? And I think they're correct in doing that. I checked the temperature again yesterday, and we're just pounding out the heat here. August is above normal, and we're just lowering the precipitation below normal. We got a good setup. La Nina is here, even though it has not been officially called, in my opinion. Okay, here we go. In theory, this beautiful up move could be all over as soon as next week. But it could take all the way to the end of September. What's going to make it last that long? Well, we got to continue to lower that crop condition rating, continue to bring in ideas. Wow, this crop's getting smaller and smaller. And to really keep it up all the way into late September, maybe we are going to see a 167.3 yield or lower. And boy, would I love that. I'm going to kiss that CPT model, and it's going to be right 100% of the time since 2000. But unfortunately, we do have a strange setup, never seen before since 2000, in my opinion, okay? And it is a warning. We're going to get some new statistics, and it's probably going to work somewhat and not somewhat. And that's where I'm at with the CPT model. Okay. Any rate, keep in mind, though, no matter how bold you get, sooner or later, the level 2, level 1 trader, and on a shorter term basis, level 3 trader is going to say, I have bought enough. I don't care if the bin's going empty. Not buying even another kernel. And that's when that thing will top for level 2. And I don't care how much you on the sell side fight to get a higher price, you won't get it. And sooner or later, it's just going to be a few little sellers. It's going to bring down this entire multi-million-dollar market or billion-dollar market or whatever it is. It's going to bring it down into an October low. But I believe it'll only be a retracement. I think the low is in for the year, looking at individual contracts, and the low is in for the year for the continuous contract, which shows a much lower price earlier this year. Something else to watch out for, if it takes out the July high, okay, then we've got a signal that we likely have also seen long-term bottoms of various types, and the trend is probably up into next summer, and the seasonal probably bottomed, even though some will argue, no, there's always a seasonal harvest time in October. Point is, I think it'll be a minor setback, and then the market's just going to work higher into the end of the year. Do we have a chance for a robust bull market where we're going to have $4 corn in just the next 3 or 4 months? I seriously doubt it. I think once they get us, they may get it to 380, but I think they're going to say, wait a minute, we got all the way into summer to bid this corn higher. I think they're going to take their time. But we'll see how serious this problem is. As I've told you, at least the CPT model has been warning us since July 4th. There's a chance this crop is not what it appears to be. So bottom line is here for the weekly chart, still don't have any upside objectives. We'll work with the level 3 on the daily chart as stair-stepping objectives for this level 2. But I think the bulls are eyeing the July high. They want to test it. Wouldn't be surprised we get there. And in the next few weeks, wouldn't be surprised we take out the July high. And then the long-term portion of the model will be bullish. Manage your risk relative to others. Thank you.